as I mentioned before, let's get to this piece regarding Silicon Valley Bank. We just got a report from the Fed of their own analysis of what exactly went wrong here. And lo and behold, they actually point some fingers at themselves and their own regulatory failure. Let's put this up on the screen, this next piece. So the U.S. Fed admits, this is from Barron's, to failings in Silicon Valley Bank oversight. They called for greater banking oversight. They admitted some failures of their own in a widely anticipated report that was published Friday about the collapse of Silicon Valley Bank. They write, following Silicon Valley Bank's failure, we must strengthen the Federal Reserve's supervision and regulation based on what we have learned. That was written by Federal Reserve Vice Chair for Supervision Michael Barr in a statement accompanying the report. They said Silicon Valley Bank's management failed to adequately manage risk prior to the bank's swift collapse, while Fed supervisors failed to take forceful enough action after they had identified issues at the California high-tech lender. So a few things that they point to. Number one, they point to what they describe as a culture under the previous Fed vice chair for bank supervision that did not force accountability even after they identified problems with this bank, because this is something we reported before, that it's not like they didn't know that there were risks here. They knew, they sent their little notices to the bank of like, hey guys, you might have a problem. They didn't actually do anything. And this was all the San Francisco Fed. So there's that piece. They also point to those Trump-era regulations which were rolled back so that, and Silicon Valley Bank themselves went and lobbied for these regulations to be rolled back so that they would have less stringent standards and not have to face some of the stress tests that they would if they were a larger bank. So they point specifically to that. It's called tailoring the rules. The tailoring obviously completely failed. And then, of course, they point the finger, rightly so, at the management of Silicon Valley Bank, which, was more interested in sort of like covering their ass and short-term gain than really understanding the risks that were posed by the way that they had consolidated in this one industry and the way that they had this interest rate risk compounded on top of interest rate risk that made them very vulnerable.
Yeah, I think it's important for everybody to read that report because what really comes out is one where the Federal Reserve is, they're supposed to be the watchdogs, and their entire existence is around the independence set up by Congress outside of the democratic process and the theory that these experts can do a better job than democratic oversight. Well, how did it work out? It turns out they're not doing it. And this is, again, why I think that the preferential policy is to have as few banks as possible that have massive control because they're easier to regulate. Of course, you only have to deal with 6 guys. You're like, hey, guys, this is now the policy. Everybody's like, okay. They don't actually want to have smaller banks to be regulated because when they do, especially like Silicon Valley Bank, which is outside the norm, they operate very differently, mostly intertwined with the tech sector. They basically just said, you guys do whatever you want. You're good. You guys are printing money. The tech sector economy, you're very different than the rest of these banks. So we're just not going to even develop a new agency or whatever to try and understand your business model and, fails overnight. And everybody in the country is like, wait, what? Are we living in 2008 again? What's happening? I mean, I don't think we should underscore, just because First Republic isn't, a contagion across the banking sector, that doesn't still make it a crazy story. You have 3 actually, bank failures in the span of 3 months. I mean, that's actually more than what we had in some of the early periods of 2008. So yes, it may not impact you directly, but we're setting the stage for something pretty crazy down the line.
Yeah.
And I think people should get that.
Yeah, absolutely. In terms of Fed oversight, Stoller and others have pointed to a cultural shift that, this guy, Michael Barr, is pointing the blame at his predecessor, like, oh, that guy, he didn't do a great job here. I'm doing a much better job in the position. Maybe that's the case, but it, doesn't really appear that way at this present moment. But there's been a longer-term cultural shift that came from an assumption in the Greenspan Fed era that effectively these banks were now so big and they were so complicated that there was no way the government could really effectively understand them and effectively supervise them and effectively regulate them. So the shift in the culture happened really decades ago, where there was a view of, you know what, since we can't really do this ourselves and really get our arms around this in the way that we used to be able to, we are going to outsource the job of supervision to the marketplace. Our focus is going to be on creating these sort of rules and guidelines that these hoops that they have to jump through, and then this push towards just making things transparent so that the investors and the depositors and the customers, so they can do their own due diligence and really understand and hold these banks to account. Obviously, I mean, it's like the ultimate neoliberal view of the world, right? Like, we'll just kick it to the markets and let them figure it out. That culture and that direction of banking supervision has obviously been an utter and complete failure. And it leads to situations like you have with Silicon Valley Bank, where the regulators were like, this is kind of an issue. We're going to flag it for you. You know, we're going to tell you, like, maybe you should do something about this. But we're not actually going to take action because they no longer had that culture of feeling like this was really their responsibility to take on. So I think that's underlying all of this, which is a much bigger problem than these three banks. It's a much bigger problem than Randall Quarles, the last, Fed vice chair for supervision. It's even a much bigger problem, even though this was a major issue as well, than the regulatory rollback that was in 2018, which I'll remind you, I mean, this was a Trump-era initiative. It was supported by a number of Democratic senators, Mark Warner prominent among them, who still was defending the rollback of these regulations that allowed Silicon Valley Bank and other banks to skate and not face the type of supervision that they should and scrutiny that they should have been under. And the explicit argument that was made by Silicon Valley Bank at the time was, we're not systemically important. So, we're good, we're not risky, like, we're fine anyway, don't worry about us. But even if we were to fail, it's no big deal. We're not systemically important. And of course, we saw the way that was clearly not the case, at least in terms of the way that our federal government reacted to their failure. I personally think it might have been fine if they let it be unwound in the standard process. But they came in and basically transformed the entire banking system and put in place extraordinary measures, extraordinary programs in reaction to that bank failure, really exposing the lie that obviously, at least in terms of our federal government, the way they viewed this, they did view Silicon Valley Bank as systemically important. And, logic would dictate that they also view other medium-range banks of that size in a similar manner. First Republic Bank is actually larger. I mean, this is the second largest bank failure in history. So this is a huge bank failing. So nobody should just be like shrugging their shoulders about what any of this means.
No, and Charlie Munger, to your point, as you said, has also been raising some alarms. Put this up there on the screen. He says that the banks are, quote, full of bad commercial property loans, and that while it's not as bad as it was in 2008, quote, trouble happens to banking just like trouble happens everywhere else. In the good times, you get into bad habits, and when bad habits come, they lose too much. So what he's basically speaking there is about those commercial property loans that they have on their books, not as penetrating as the original mortgage-backed securities that were on the books in 2008, but that's directly how it relates to the interest rate rises, which is, and plus COVID, all the catastrophes happening in the commercial property sector. And, voila, people who were overexposed to that get nuked, and now they're just dead overnight. And we're supposed to have the Federal Reserve and other regulators make sure that this doesn't happen. And now we've had 3 in the last couple of months.
Yeah. Does anyone feel confident that there aren't other banks out there that are super exposed to this commercial real estate situation, for example, or some other interest rate risk that, that they maybe are aware of but didn't really push or do anything about? So we're going to find out in the coming days and weeks and months exactly how all of this unfolds. But already extraordinary situation with these 3 significant banks failing in succession in a very short period of time.
Yeah, I think that's right. And I think the sad part is that from a rational actor point of view, on the individual level, the thing you should do is you should move your money to the safest banks, which are the big ones.
JP Morgan
But
Chase.
yeah, I mean, like, again, on an individual level, that is probably the best thing to do. The whole point, though, is to try and make the incentives such that we don't want to do that. This was some of the worst nightmares of the original progressive era and the era of combination and of power. They understood what a completely oligarchic-controlled banking sector would mean for the entire country. And there were a lot of farmers and others who had been foreclosed on and destroyed over the years who fought very hard against that. And unfortunately, probably going to have to learn that lesson all over again.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.